Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm a KCAM Financial. Well, expiration day today, and with that we did see the SPX marked higher initially this morning. Up slightly currently. We're giving up some ground. We're off the highs of the session, but nonetheless we're still seeing the SPX holding above the break-even point here, and with that the VIX cash is under some pressure. VIX cash currently around 21.5. Now we did see it break below 21 briefly. Now we're seeing it firm up a little bit as the SPX is giving up a little ground. And with that, I want to point out that we're looking at the roll market continuing to widen out now that March is the lead month for the VIX futures. March-April roll is the lead futures roll, and we're seeing that trading around $3 now. That's out about a buck from last week. Now we did see it actually a little wider initially. We're seeing that close the gap, but nonetheless, March future now being pulled towards the VIX cash as we are seeing that dynamic shift. And we're seeing the futures curve steepening now between March, April, May, and we're seeing contango actually all the way out to July now. So a shifting of the futures curve this week, particularly in the middle to the back months. Also, realized volatility, I want to point that out. 10-day realized volatility cut in half this week from 14% to 7%. 30-day realized volatility down 1% from 15.5% to 14.5%. And so when you look at that at-the-money straddle, March at-the-money straddle for the SPX, it's currently around 16% implied volatility level. So not too far outside of really what the market's been realizing in the last 30 days. But again, I think it's that put wing. You're seeing skew continue to hold firm. Demand for those out-of-the-money puts in the SPX, keeping this VIX cash firmly above 20 currently. And looking at the activity today, really it's primarily ratio spreads in March, April, and May, and out-of-the-money calls and out-of-the-money puts. We're seeing continued reallocations here, particularly when you look at the May options activity around the 22 and 23 put strikes. Looking at next week, I want to point out we got some data points, housing being highlighted. Really, I think it's going to be more focused on the Fed speak that's going to come out next week, coupled with the stimulus negotiations and that process, how it continues to unfold as we move towards the last week of trading for February.